Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 1st of November. All right, now, start of a new month, non-farm payrolls on Friday. It's really time to sort of tune up your understanding of what's going on in the market and then look at the best technical setups and try and sort of fit it in for a pretty solid week of trading. Now, just coming back to Friday's numbers, the PCE price index, right? One of the key inflation numbers the Fed looks at. Numbers came in still sort of hot, okay, a little bit stronger than expected, and that's given the dollar the dollar index. You can see here sort of a bit of a boost, and two pairs that really sort of felt the crunch was euro and sterling, particularly euro, and then you had sterling following up with that. The Aussie and Kiwi, it drifted lower, but still didn't see that big follow through. That was sort of the same as the CAD, with some Canadian GDP numbers being released there on Friday as well. So what we've got a situation is it's a bit of an odd one, right? We had the ECB last week. You know, they were talking up the prospect of potentially, you know, starting to taper some of their stimulus packages. Some of the questioning, it's looked like some of the questioning around Lagarde when she was pushed on that didn't really give too much information, right? So they just think, well, they're just going to let it go. We saw a lot of stale short euro positions taken out. We had the US numbers come out and a solid move on the dollar. It looks like the market's factoring in two 25 basis point moves by the Fed next year. I think it is, or 23. And there's so much news coming out. So basically a big clean out on the downside there in euro once again. Leaves us, and with the dollar index still moving to the top side, we start the week with a strong dollar perspective, right? Now it's I don't know what in particular is holding the Aussie and Kiwi up, but I suspect if euro and sterling continue lower, they will just play catch up at some stage. But right now, coming through the weekend, the markets are reconnecting through the Asian session. It's still a little bit sort of grey in some areas with regards to what is exactly driving what, right? You come back to the sort of key fundamental numbers here. I mean, a little bit of a skew there. See the US 20-year much higher yield than the 30-year. So a little bit of disparity there in some of the US treasuries, but they are generally rocking and rolling, heading back to the top side. The pairs right at the moment, we've got US equity futures up, right? So it's not really a risk on, risk off day, because if that's risk on, you'd have the dollar block rallying, but they're not, right? So really, I think at the moment, I think a lot of traders are scratching their heads trying to work out, okay, what's going on with the major currency pairs? Where's the dollar? And why is it up against certain pairs, down against other pairs? So there's no uniform movement on the dollar, and that confuses the market, and they will take time to sort of wait for that to line up and get a good idea of what's going on. Now, start of the week as well, okay, reconnect, draw your trend lines, get all those things put in place. What you want to do is as well, have a look through the rest of the week and start to get an idea, get a feel for what's coming on. So I'll just focus on the high impacting numbers, like the ones here highlighted in red. Now, Chinese numbers coming into play, well, maybe. I haven't really sort of seen significant signs of that, but what you are going to be looking at very closely, obviously this week, we've got a bit of dollar strength. We're looking for confirmation there. So looking at Tuesday's ISM manufacturing numbers, and there's a bunch of other numbers coming out at the same sort of time there. Keep an eye on that. That's obviously key to it. Tuesday, we've got the RBA interest rate decision. No change in rates expected there, but maybe they'll start to chime in with a bit more insight into what they plan to do to manage the economy as it comes out of that lockdown sort of phase. You come into Wednesday's trading, there's a bit of data here and there, okay? Some PMI numbers out of the UK, some mortgage numbers out of the US, and then you've got, and then you come into Thursday, we've got the second part of the ISM numbers, the non-manufacturing numbers. So the key to that, but obviously the Fed interest rate decision and the press conference half an hour later will be the key pretty much to the whole week, right? It's a major event for the global markets. It sets the tone for the dollar, bond yields, etc., for the US, which are coming and going as far as impacting other global bond markets, equity markets, and then currency values. That's obviously the key to the week. But just when you thought it was safe to go home, well, actually, I won't go straight to the non-farm payrolls. We do have the Bank of England as well, right? No change in rates expected there. So a pretty busy schedule there with the Fed, the Bank of England, and then when I just scroll down a bit further, we will have the non-farm payrolls. And unfortunately, the Canadian employment numbers coming out at the same time. But a lot of interest around these non-farm payrolls, right? The market is already factoring in rate hikes in the not too distant future for the US market. Really strong numbers here would sort of back that up. So we'll have to wait and see how that plays. So it's going to be, and sometimes when you do have a week where you've got the non-farm payrolls coming out, it can sort of hijack the week, right? But, most importantly, we have the Fed coming out. That's going to be the first port of call. So everything up until the FOMC meeting will be focusing on the, obviously on the FOMC and what happens there. And then it will quickly switch to the non-farm payrolls, right? Obviously, any referral here in the Fed statement or press conference with relation to, we're going to be watching for maximum employment, that's going to create extra hype around the non-farm payrolls. I would expect them to put that in there as well. Maybe some tapering, who knows, right? So leading into the week, we've got some, those ISM manufacturing numbers, a pretty good historical number, give the dollar some sort of clear direction. As I said, at the moment, we've got like a bit of a dollar up move, not across all pairs, but across some of the key ones, sterling and euro, and we're waiting to see what goes on. So for those traders trading equity indices as well, don't forget, the FOMC meeting, the Bank of England, any of these central bank meetings are important for those equity moves. So don't just look at the currencies, consider the equity indices as well as potential opportunities. Any sign of or talk of higher interest rates, you're looking for lower equity prices and vice versa, right? Good time to get yourself worked out. There's like the first 2 weeks of the month, there's so much data coming out. It's hard to sort of go through and micro analyze everything, but there's loads here, right? I'm just focusing on the bigger stuff. And I tell you what, there's so much information coming out across all centers. It's action stations and time to really get your head around what's going on in the fundamentals. All right, guys, have a good one. Cheerio.